Hello, hello. This is Wayne Blau with another Smart Profit Maximizing Moment. Welcome, welcome. We're going to basically do a rerun a little bit, but there's a reason I'm doing it. It's becoming more and more critical. All right. Anyways, before we get started, this show is dedicated to helping business owners dramatically improve their bottom line with our weekly profit maximizing tips that you can use now. I'm your host and coach, Wayne Bilal. I'm also the founder of a local CPA firm that works with business owners, help them make more money, keep it from the IRS. That's basically what I tell people we do. We help you make more, keep more. It's pretty simple. I do that with our profit coaching programs, with our tax planning systems, which has saved our clients over $6 million, actually over $7 million over the last 6 years. And it's tax season plan right now. We're doing plans as we speak. We do all this legally. We use legal measures because, like I say every week, I love my clients, but I don't want to share a jail cell with them. Again, this week we're going to talk about employee retention credits, and the reason I'm going to talk about them is I'm seeing a lot more advertising. I thought I hung up on me. Seeing a lot more advertising for this, and you might be missing out on thousands. You might be. All right. You could be easily not, you getting phone calls. A lot of my clients are getting calls about this. But before we get into this subject, let's first, support for today's show is brought to you by Profit Maximizing Publishing. I can do this. One of these days I'm going to get this right on the first try, which published my book, The 90-Day Profit Reset, which shows you how to gain your independence from reduced cash flow, shrinking margins, and evaporating customer base. Really much more. I wrote this basically after COVID hit because I thought it would be necessary, with the shutdowns and things like that. To tell you honestly, I think it's more valuable now with higher inflation and a recession, or whatever we're going to call it, the slowdown in business, the problems with supply chains, employee problems, the whole 9 yards. It's more important now than it ever was, to be honest about it. In this book, like I said, that you're going to find chapter after chapter, idea after idea about how you can turn around your business from red to black in 90 days or fewer. And even if you're making money, this will help you make more money. All right, why am I coming back to the employee retention credit again? Well, strictly speaking, it's pretty easy. One, it's being really overlooked. All right. But secondly, I'm seeing more advertisements. I was watching a show, I can't even remember what it was, on one of the news channels. And all of a sudden they have this group that's, we're saving billions of dollars and getting you money back that you might not even know. And the truth is, yeah. Every new client they pick up, none of them yet has anybody talked to them about the employee retention credit. All right. And I was just looking, I've done 39 of them so far. All right. I have more to go for a total of over $4.8 million, $4,883 and some change that I've gotten my clients back. It's an average of $125,000 a client. Now, most are, quite a few are above that, but I've had some as low as 3,000, and I've had some as high as 700,000, and everything in between. Yeah, I'd say probably on a more normal average, somewhere between 40 to 150. But what this is money that you get back. All right. So what is the employee retention credit? Well, hold on a second. You have to go all the way back to when COVID first hit in March of 2020. Hard to believe, or 2 years, over 2 years past it. Doesn't seem that way. Sometimes it seems longer, sometimes it seems shorter. All right. And the U.S. government passed the CARES Act, a bill designed to provide financial aid to millions of American small businesses because of COVID-19. The two most notable programs for businesses was the PPP loan and the employee retention credit. Now, everybody knew about the PPP loan. It was basically a loan that could be forgiven. It's pretty much done. But almost nobody really seemed to understand about the employee retention credit. And that was really because the laws that originally was done said you couldn't do both. You couldn't get both the employee retention credit and the PPP loan. And that was changed shortly thereafter. All right. Give me a second, a minute. Bear with me. That was weird. I went to print it, so I wouldn't have to look over here so I'd remember. But they changed the law on that. That's the problem with the employee retention credit. There's been, first it was in 2020, you could only use one or the other. Then the law was changed in December of 27, which extended it. and made it more powerful, so there's more money involved, right? And the second thing that happened is then the March bill, there was another one in March, let us added more quarters and let us go back and amend, and could use both, but I couldn't use wages that I used on the PPP loan. And then there was an October one, which got rid of the fourth quarter. So this got all kinds of confusion and moving parts, and a lot of preparers just didn't stay up on it. It was just easy to get the PPP loan, wait 8 weeks, 24 weeks, and then just turn it in. All right. So, I mean, that's pretty much it. Now, another problem is a lot of business owners are believing that the employee retention credit is a loan. It is not. All right. It's not a loan. It is, strictly speaking, a credit against payroll taxes. All right. So you have that problem where there's a lot of confusion. Not many people are doing it. And, there's been too many law changes and people just don't understand. They think they missed it too, is another thing, which is not true. I can go back into 2020 and 2021, and if I qualified, I can file amended returns. Now, the downside, IRS is slow. It's taken 6 to 8 months to get the refunds. You weren't expecting it. An average of 120 some odd $1,000 taking a run. All right. Now, what I'm finding, surprisingly, is that 60 to 70% of the businesses I look at are qualifying. Even if for the year 2021, you actually had an increase, that doesn't mean you didn't have a one quarter that was down, all right? Or you were closed, all right? So there really was two requirements. The first is the business must have been fully or partially shut down during the COVID-19 government order. For 2020, it was a long year. For 2020, that wasn't too hard. I mean, there was a lot of times where you were closed, and you didn't have to be closed for the whole quarter. If you were just closed for a few days, and then you were allowed to reopen, you qualified. All right. Well, that's not the one I'm getting too many. Usually restaurants, bars, party halls, things like that, those were closed down. I'm able to actually find something for them. The second one, though, is having a reduction in a particular year versus the last pre-pandemic year, which was 2019. Now, that was hard. That was another reason people put off the ERC, because when it originally came out, I had to have either be closed down or have a 50% decrease in the same quarter in 2020 versus the same quarter in 2019. So I had to be 50% down in the second, third, or fourth quarter of 2020. Now, so people remember that, but the law change in December made that a different one for 2021. All I had to do was be 20% down versus the same quarter for 2021 versus the same quarter in 2019. Not so hard to do now. All right. Now that made it where it was much more likely to be acceptable. All right. Where you're much more likely to qualify. So one of the things I was looking at is, when we go back and look, I've had multiple, especially in the construction industry, but really just about in every industry. In the construction industry, in 19, you had a big job in the third quarter or in the second quarter of 2019. All right. And in 2021, you didn't have it in the second quarter. You had it in the third quarter. So I've had more often than not, and that's pretty common in construction, all right, because your income doesn't go like this. It goes, it fluctuates all over the place. So I've had more than one client in that industry and in others that had a better year in 2021 than they did in 2019, but qualified because one particular quarter was down from another. Look, I didn't write the law. They didn't think this through, I guess. But I mean, it's in the law, it's legal, it's a tax refund, it's a tax credit. All right. So all I have to do is show that I had a 20. Now I have to use the same method of accounting that I use for my tax return. So if I'm on a cash basis, I have to look on the cash basis. If I'm on the accrual basis, I have to look on the accrual basis. Now, so the first step, see if you qualify. Second step then is to see what wages are qualify. All right. So the wages, all right, you look, I qualify for the second quarter or whatever quarter. All right. So now I look and see, did I have wages that I used to get forgiveness for the PPP loan? So let's say I got the PPP loan in February. I used it all up by the end of April. Okay. Even though I qualified for April, May, and June of 2021, I'm only able to use May and June's payroll because I used the first month on the PPP loan. Now I take that, and if anybody that Anybody that made more than $10,000, I reduce it to $10,000 and then multiply it times 70%, and that's your credit. All right. Cool thing. If you qualify for one quarter, you will automatically qualify for the next quarter. So the fact that I qualified for the second quarter, even though I have a big job in the third quarter, I'm not going to be down. But because I qualified in the second quarter, I automatically qualify in the third quarter. And now I don't have the PPP loan, so I have all 3 months I qualify for. That's how these things are starting to end up having some real money behind them. And what's kind of interesting, there's a little bit of screw up here. In the fourth quarter of 2020, comparing it to the fourth quarter of 2019, I had to have a 50% drop to qualify for the fourth quarter of 2020. But if I had a 20% drop in the fourth quarter of 2020 versus the fourth quarter of 19, even though I didn't qualify because that rule wasn't there, I automatically qualified for the first quarter of 2021, even if I didn't have a drop. Wow, confusing. I warned you. There was 4 changes to this thing. It's part of the reason why people aren't doing them and people aren't paying attention. And that's what I'm seeing, is that you're having these commercials and you're having people out there and they're taking a percentage. Look, this is confusing. We've invested a lot here, so I don't do it cheaply. But I definitely don't, if I'm doing an average, what do they say, 125,000, I'm not taking 10%. Nowhere near. And some I'm hearing are 15 to 20% is what they're taking. And one client didn't call me, paid 20% to get the money back. He was all happy. It's just, I'm not convinced that you legally can do that. All right. Source documentation, if you practice before the IRS, you're not supposed to do a percentage. And doing an amended return, I would argue, is source documentation. I lost my place now. Hold on. Let me figure out where I'm at. It's the other reason I was doing this, because there's so much confusion. There's starting to be a lot of people out there calling you directly, and then putting a telephone number up saying call us. First step then is, one, make sure you haven't done it. All right, call your tax preparer and make sure you haven't done it. Second step is figure out whether you qualify. All right, you can do that yourself. We'll watch this video. I kind of walked it through it. Kind of confusing. I wouldn't. Then the next step is to find somebody who's going to do it for you that will not charge a percentage. All right, if they're charging a percentage, I'd stay away from that. You just need to find somebody who does it. You're more than welcome to give me a call. My contact information is here, but our office number is 915-857-8158. This is something we can do without being anywhere near you if you're in a different city. All right. You can hit me on email, wayne@wjb-cpa.com. So it's Wayne, W-A-Y-N-E, at WJ as in John, B as in boy, dash, subtraction key, whatever, CPA.com. Tell me you think you might qualify, and I'll tell you what I need, and we'll do that. We'll see if you qualify for free. I mean, it takes very little time. We've done these before. Obviously, if you qualify, then if we do the work, we're going to charge you, and I'll tell you how much that'll be once I know where we're at. So, look, you could be leaving thousands of dollars on the table. Good news. Don't be rushed into this. All right. Statute of limitations gives us time. So for the ones in 2020, if you qualified for 2020, which tend not to be that large, okay, but if you qualified for 2020, the statute of limitations is 3 years starting from April 15th of 2021. So I have 2022, 23, 24 to file an amended return. The statute of limitation then for the first 2 quarters of 21, 22, 23, 24, 22, 21. 21. Yeah. So it starts April 15th of 22. See, confused myself. 23, 24, 25. Except for the third quarter where they added 2 more years. So I literally have till April 15th of 2027 for the third quarter. All right. And I didn't even discuss one last thing. If you started a business after, wow, my brain stopped. I want to say March something of 2020. If you started a business in February or March, I'd have to look that up again. It's one of those. Then you could easily qualify for $100,000 for the third and fourth quarter. Even though they got rid of the fourth quarter, they didn't get rid of it for that. Confused you enough? I guess what I'm trying to say is look to see if you already had it. If not, do the math or get somebody to help you. Get your accountant to help you, your tax preparer, and figure out if you have those quarter drops. All right. Got to have employees. Won't work with 1099s. All right. There's other rules. I, believe it or not, just spent 15 minutes simplifying it. Until next time, this is Wayne Blau saying, let's make this our most profitable year ever. Thank you very much. And